Hello everyone, welcome to Algo Expert. Today I'm going to explain you how I took this trade here on ES, the S&P 500, and this is the same example how you are going to trade commodities like gold, how to trade all the futures, NQ, ES, or indices like US 30, NAS 100, S&P 500. It's always the same thing. So this is the strategy, how to trade indices, future and commodities. And it is really simple because it is institutional how they are looking for trades, and we are doing the same thing. First of all, we have here bullish structure. That means the weekly is bullish, the daily is bullish, and the 4 hours bullish. That means the higher time frame are on the bullish side. We are looking only for buys. Then the second confluence is, this is the previous accumulated cash session profile. That means this is the complete entire cash session week from the previous week accumulated, the volume profile. So you see here the value area low, the point of control, and the value area high. Don't worry, and this tool is doing everything already for you. But this is the accumulated cash session profile to understand based on previous cash session accumulated week, where are we currently, where price is trending currently at. That means we are always trading on the bigger picture. If we are zooming out, let me do it here a little bit bigger. If we are zooming out, let me here just also check this off. If we are zooming out, we see that price is trending currently above value area low of the previous accumulated cash session profile. And we are looking for buys because above this zone, we are trading here. You see that as like support and resistance, but only with institutional levels. That means under we are looking for sells, above we are looking for buys. And we are trading from here to the next point. This is the point of control from here to here. These are take profit zones. Like this is the first take profit, this is the second take profit. If you want to sell, you are selling from here to here, the same thing. Or we are trending above this level, then we are also looking here for buys. That means we are trading from here to here. The same thing as like you see that here. Always price is using this as support and resistance. But these are very accurate because these are institutional levels where the most amount of volume is at a specific price. And the same thing also here for sales. If you want to look at this area here for sales, only if price is coming under value area low, not here above. And so on and so forth, sorry. So that means if we are looking here for the bigger picture, we see that we can trade because price is trending above value area low. We are trading from here to the next value area high. That means based on the bigger picture, we are only looking for buys. First confluence, weekly, daily, 4 hour is bullish. That means we are looking for buys. Second confluence is the previous cash session week cash session profile is also we are trading above value area low. That means we are looking as second confluence also only for buys because this is here buying from here to value area high, as I have explained. Now the third confluence is we are looking at the previous day cash session profile. If we are trading here on Thursday, we are looking at the cash session profile on Wednesday. And don't worry, everything is automated. That means you don't need to do anything because the session is selected based on the cash session profile, and you see here exactly where price is at from the previous cash session profile. And once market, let me just go back in time. You see that here. Once price is opening here, you see that here. Now it's inside value area. Before that, it wasn't there because this is the market opening. You see that here, just let me zoom in. Now the market is opening, you see inside value area. This is statistically proven. So we don't even look at the first confluence, second confluence, all the confluence which I have explained until now, that only statistically approved if price is opening inside value area, that this statistically proven from the auction market theory that there is above 70% chance that price will trend from value area low to value area high, or vice versa from value area high to value area low. That means without any other confluence which I have explained, from the weekly cash session profile, from the confluence based on the structure, nothing, I'm not explaining anything, based on that you see that price is opening inside value area, market open, previous day cash session profile. You see here the calculation, there's also other confluences, but only because of that you have a statistically proven of above 70% chance that price is now going from value area low to value area high without any other confluences. And imagine we are now adding the confluence of the weekly, daily, 4 hour, that the higher time frames are bullish. We're adding the confluence that we are trading based on above value area low of the previous week cash session accumulated profile to this zone here. We don't even imagine we are adding these confluences inside, and imagine how much accurate your trades are going to take. That means we are trading now from value area low to value area high based on all the confluences which I have explained. And now we see here, you see that this yellow box here is the market open initial balance. This is like the same thing as from where CRT is coming from candle range theory. This is the first hour. The initial balance is also an auction market thing, but there are gurus and other people who are trying to explain you CRT, and they are telling you that they have, like for example, it is their own thing, but it is nothing. Everything is coming from the auction market theory. This is the first hour from here to here. So this is 1 hour candle. If you are measuring, this is the 1 hour candle, and this is now the wick. You see here from here. Sorry for that. It's not. But I think you got my point. This is the first wick here, and this is the second. So this is the hourly candle, and this hourly candle is the same thing as this yellow box here. That means if price is trading, like for example here, and it's coming after the first hour, that you are trading from the CRT low to the CRT high. This is nothing else as initial balance, because initial balance is the truth where where institutions are trading and the point where price is going at, and CRT is like every single 1 hour candle. Because you see, sometimes the CRT working and sometimes not. Why is it so? Because time is more important than price. And why is time more important than price? Because institutions and banks are only opening positions at some points where there are a lot of liquidity, because they need like buyers to sell and they need sellers to buy. They can't even just press on MetaTrader or whatever, NinjaTrader or whatever platform you are at to open a position. They need buyers to sell and they need seller to buy. So only at specific times there can open a lot of positions, because the volume is there high. And where price, which time are the most important, it's always at market open. This is the initial balance of London, this is the initial balance of New York, and this is the cash session initial balance. That means the cash session initial balance is where the market open 9:30 a.m. EST, and this is the first hour of the first hour candle range. And you see after the first hour is closing, the yellow box is now finished. So this is the range. And you see here, this is the first confluence. So the first confluence, we have everything bullish. Second confluence, the weekly is also on our side. The weekly profile that we are looking to trade above this value area low to value area high. This is the second confluence. Third confluence, we have inside value area market open. That means above 70% chance, only this one confluence to trade from value area low to value area high. Then I don't know at what confluence we are currently at with the number, because there are a lot of confluence here. The first initial balance, we are trading from the initial balance low to initial balance high. That means we are rejecting the lows. You see here, we are rejecting the lows, the initial balance low, and trading to initial balance high. But our take profit is based on the weekly, because the weekly we are looking to swing it to the upside. And you see here, this alone is a 1 to 7. And imagine holding for more. This is the next confluence, is we are rejecting also the overnight low. This is the low, that means the low which has been created out of session from the previous day. That means before the session is opening. So that means if this is the Wednesday cash session profile, after market close on Wednesday, it measures out of session the highs and lows. These are the overnight low and overnight high. These are institutions also have a high percentage that there will, at the day, it will reject the overnight low or the overnight high. And imagine you are adding this also as a confluence. That means it's rejecting the low which has been created out of session. We have now this confluence. We have the confluence of the overnight low. We have the confluence of the initial balance. So the initial balance is the same as the first hour CRT. It's the same thing, but it's not the same, because on CRT it's any 1 hour candle. But here we are trading institution based on the initial balance. This is so you have everything on your side, a lot of confluences, and we are opening the position. There are more even confluences based on the you see here, this line here, if you can see, and also this line here. It measures the VWAP of the previous cash session profile and also of the cash session profile of the market opening. And we are also above VWAP. That means there are a lot of confluences to just look for buys. I'm pretty sure that a lot of people here have sold at this day. There was looking for sales or whatever. But because we have an understanding above this way how institutions are trading, after I'm explaining you everything here, would you even look for sales at this day? No, because it is, you have the confluences that the price is going to your favor, to the upside. And this is, you see here, this is the first take profit. But if you want to hold more for more, you could even hold for more. That means if I'm going like here, skip and just look, if we was holding, you see here, you could even, this is the 1 to 7 from the same take profit. But imagine holding for long, because we know if we are looking here, activate this thing again, because we know the higher time frames are bullish. That means we know the S&P 500 is the higher probability is that it's going to buy for more and more. You see, this is a 1 to 16 and so on and so forth. This is always the same thing. You are looking at the previous week, you see here. This is the previous week cash session profile, because now it is a new week. This is the previous week cash session profile. We are looking also on the current previous day cash session profile. This is the accumulated complete week of the cash session profile. And this is the previous day. And now we are trying to build our bias with the initial balance, with the overnight highs and low, and to understand where the price is currently at. It's always the same thing. And this example here was based on just one thing. I will start new from the where we have took price here. Just one moment. I'm going on the M5. You remember at the time I told you a loan that you see inside value area. Alone of that, you have above 70% chance that price is going to from value area low to value area high. That means without even all the other confluences. No initial balance, no VWAP, no previous week cash session accumulated profile, no previous day cash session profile, nothing. Only because of one sentence inside value area, you have a 70% chance that price is going from here to here. And there are other scenarios. What scenarios are also that price can, for example, open not inside value area. It opens, like, for example, above value area high or under value area low, but with a small deviation, medium deviation, or large deviation. How you are measuring this deviation? The measuring of the deviation is coming automatically with this tool. So this tool here is doing automatically whether we have small deviation, large deviation, and medium deviation. And you don't even need to do that. And there are other statistics approved. That means if, like, for example, if at this day price is opening, like, for example, here. This is just an example. And we have, like, for example, a small deviation. That means there are above 80% chance that price will come back to value area high, to this place, above 80% chance. That means you can sell from here to here, but you only 80% chance without even looking at other confluences. And if we have, like, for example, a large deviation, like, for example, price is here, there are above 65% chance that price will not return to value area high and continue to the other direction at the trend where price is currently at. Above 65% chance if we have a large 65, yeah, exactly, 65% chance if price is opening with a large deviation and it's going to not come back down to value area high, it's going further up with the current trend where price is at. And the same vice versa if price is opening with a large deviation under value area low. That means only to understand of whether we have inside value area, small deviation, medium deviation, large deviation, only because of that you can statistically understand where price is going to go. That means if price is here on large deviation, some people are shorting because they think, for example, price is going here, I don't know, seek of liquidity or whatever, but price is buying. So alone to understand this, you will immediately know whether to look for buys or look for sells, and statistically are proven from the auction market where price is going to trade at. And how it's going to be measured, this tool is doing everything automatically for you. But for people who wants to do that manually, because I don't know, they are do it for themselves, the cash session profile, because this is everything is automated. How it's going to be calculated inside value area, if price is opening between value area high and value area low, this is inside value area. If price is opening with a small deviation, that means the pips amount between value area low and value area high, and the pips amount between value area high and where price has opened at, subtracted by itself, that means minus this inside this from here to here, the measurement, minus from here to here measurement, divided by the same thing multiplied by 100 will give you the whether we have a small deviation, medium deviation, or large deviation, or inside value area. For inside value area, it's clear. If it's open inside, price is opening at market open between this here, you will see immediately inside value area. If it's opening here, you don't even see directly whether we have a small deviation, large deviation. You have to calculate it. But this tool is already giving you the calculation. If you want to do it for yourself, you can do that, but you don't need that because the tool will give you whether we have a small deviation, large deviation, or whatever. And if price from here to here and to here with the calculation have an the mathematical thing is under 20%, then we have a small deviation. Between 20% and 50% ratio is medium deviation. Everything above 50% will be a large deviation. This is the mathematical, how much percentage, the ratio between this zone to the market open price. If you do it with the minus, the multiple with 100, the percentage, how much you will get to understand whether we have inside, small, medium or large deviation. But as I told you, this tool will do everything automatically for you. You don't even need to do anything. Let me just go back in time to like, for example, see if we have an example based on another deviation. You see that here. Let me just zoom in. You see here, if we are going again back in time before market open, you see here, this is before market open. Now the next candle, we have a medium deviation. You see here, it calculates everything automatically for you. That means price, the measurement of this here from here to the price here to value area high to the market open price. That means not the candle, not from here to here, where price has opened at. This, and you measure the value area high to value area low, and you do the mathematical calculation of it to understand with medium deviation. That means the ratio is between 20 and 50%. That means now you have a 70% chance that price will return to value area high. You see, it's very complicated if you want to do the mathematical calculation for yourself. But you don't even need that, because it is going to do everything automatically for you. The only thing you need to do is just plug in this tool here, and you will then immediately understand, okay, we have medium deviation, we have 70% chance that price will return to value area high. Let me now have the initial balance. This is now the initial balance. You see here, and you see here price, this is the initial balance, has been created. Price returned to value area high, and so on and so forth. I didn't even look at previous week volume profile. I didn't cash session profile. I didn't even look at the market structure. I didn't even do anything based on any other confluence, because I didn't even watch this trade here. Just an example, and you see here that price will return. And most of the time before price is returning, if I tell you, like for example with a medium deviation, price will return to value area high, there's above 70% chance. If you see here, just another thing, if you see here that with the medium deviation that was 70% chance that price will return to value area high, it will take out any liquidity above before it's going to go to the downside. That means it took out the overnight high, it's going up, and then it will do the 70% chance to take out the value area high or value area low, vice versa if we are trading like here, or it will take, like for example, a key level from here above. But I didn't even look at this rate, just an example based on how you calculate these deviation things. Please write down in the comments if you understood everything, if I have to go in detail about something. Last but not least, the link under this video, there will be the link for our Telegram channel. There is a 40 days free trial to just click here on this link here, and you can test all the tools which we have on Algo Expert, the Scalper, the Clean PA, everything 40 days for free. It's a free trial, test it out. If you don't like it, you don't need to subscribe. If you like it, welcome to Algo Expert. So you don't even need to buy before you test it out. So feel free to test it out. Last but not least, I'm not a financial advisor. I have to say that all the time. I'm saying that for all the videos, because I'm not selling you any courses, no mentorships, no signals, nothing. I'm just only here having the algorithm trading tools which are here, and I'm explaining you for free how to use them, how to trade them, and how to look day to day for the same setups, the same strategy. It's always mechanical. It's nothing which I'm teaching you which is not repeatable. It's always the same thing, because there are some strategies or some things which are happening once every few weeks, but this is always the same thing. Look at previous week value area, accumulated cash session value area, look at the previous day cash session profile, and look at the market structure. And based on that, after market open, you will understand we have inside value area, medium deviation, small deviation, large deviation. We have the initial balance. We have the overnight highs and lows, which are automatically calculated. And with that, you are building your confluences, your edge to look for buys or look for sells. So it's always the same thing. And this is what I'm teaching you if you want to trade futures, commodities, indices, and so on and so forth. And on our previous YouTube video, we have explained about Clean PA. This tool we can also use, of course, with indices and futures, to use it as extra confluences, both of them, to use them together. You can use it for Forex, the Algo Expert Clean PA, but this is a topic of another video. If you have any questions, please feel free to ask them, and wish you all the best. See you soon. Bye bye.